Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now we're seeing multiple bearish patterns break to the downside just after the recent speech by Jerome Powell, which I'll be talking about in just a moment. Make sure you stick around. First of all, just talking about the recent speech by Jerome Powell, who is the chair of the Federal Reserve, in case you don't know. And in summary, there was really no new information in this speech. It did have a slightly hawkish tone, which means Jerome Powell did come across a little bit more firm in bringing down inflation by raising rates. But if we're looking at the main things Jerome Powell said in his speech, he said while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. And now, if you've been watching the Fed and hearing what Jerome Powell has been saying pretty much all of this year so far, this is pretty much what he's been saying, especially in recent months, so this isn't really anything new. And now, if we scroll down, there was another point he made, which was, our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. But at some point, as the stance of monetary policy tightens further, it will likely become appropriate to slow the pace of increases. And this was pretty much exactly what Jerome Powell said at the last FOMC meeting, so this is nothing new to the markets. But just by Jerome Powell simply reiterating these same points, we've seen the futures markets price in a higher probability of a 75 basis point hike at the next FOMC meeting, which is in September. So as of right now, the decision is still between a 50 basis point hike and a 75 basis point hike. But like I said, the 75 basis point hike right now is more likely to happen at the next Fed meeting. And by the way, just before that recent speech by Jerome Powell, these probabilities were closer towards 50-50. So after that speech, we've seen more of the market price in a 75 basis point hike, which is the more bearish of the two. And due to the probability of a 75 basis point hike increasing after that recent speech by Jerome Powell, we've seen a dump in the stock market. This right here is the Nasdaq 100 index on the daily time frame, and obviously in the latest session we've seen quite the red day in the stock market, and due to the fact that crypto and tech stocks are heavily correlated, this has also resulted in a red day in crypto markets as well. And speaking of crypto, getting into the Bitcoin part of this video, this right here is the daily Bitcoin chart, and right now we're still looking more bearish than bullish on the daily time frame ever since that break to the downside in both the RSI and the price action from that rising wedge pattern. And considering the fact that the Bitcoin price has recently broken below that 20.7k low, which was the first technical price target for this rising wedge pattern, the other technical price target, which is really the main technical price target for a rising wedge pattern, is now in play, and that is coming into play at the bottom of the wedge, which is at around 19,000 approximately. But I am keeping a close eye on the daily Bitcoin RSI, because obviously if we start dipping into oversold territories, that is a signal that we're at least at some sort of local low in the price of Bitcoin. And also we need to watch out for potential bullish divergences here. For example, if the price makes a lower low, which it has on the daily time frame, while the RSI forms a slightly higher low, this could be a bullish divergence. But as of right now, this is not currently confirmed as a bullish divergence. I want to make that clear. And now if we zoom into the 12-hour time frame, it's pretty much the same story here. As I said, we've broken below that 20.7k level, which was an important level for Bitcoin. And since then, the price of Bitcoin immediately dropped down towards the next Fibonacci level of support, which is the 78.6% Fibonacci level, and that is sitting at almost exactly $20,000 per Bitcoin. So as of right now, I am expecting some shorter term support at around 20,000, but anything below that, and once again, I would expect a drop down towards 19,000, where we do have a lot of previous support. And also here on the 12-hour time frame, a potential bullish divergence is more clear on this time frame compared to the daily time frame. But once again, this is not currently confirmed because we haven't actually confirmed a low just here. So for example, let's just say over the next 12 to 24 hours, if the Bitcoin price keeps going lower, then that could form a lower low in the RSI, which would invalidate any sort of bullish divergence. But if the price of Bitcoin confirms 1 to 2 12-hour candle closes in the green, which would confirm at least a short-term low, then that could confirm a bullish divergence here on the 12-hour time frame. So keep that in mind. That could be forming but right now it's not currently confirmed. And now zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, and obviously we have a clear break to the downside that has already been confirmed from this bear flag. Or if you're looking at that middle line of support, then this could potentially be a bear pennant or a rising wedge. But either way, whether you're looking at this as a rising wedge, a bear pennant, or a bear flag, all three of those patterns are bearish patterns for Bitcoin in the short term. And so as I've been saying over the past few days, while the price of Bitcoin is above these levels of support, I was expecting choppy price action with reduced momentum. But I said the moment we start breaking below these support lines, that is when we confirm the bearish scenario and we're due to see more downside price action. And obviously we saw that initial break to the downside below around 21.4k, which was this line right here. And then we pretty quickly dropped down towards the bear flag support line, which was sitting at almost exactly 21,000. And then once we saw a 4-hour candle close below 21,000, that was our first confirmation signal for the break to the downside, which means right now we're obviously more bearish than bullish in the short term for Bitcoin, and we do have a technical price target to the downside. And if you're measuring the full technical price target for this bear flag, that is coming into play at around $18,000 per Bitcoin. But between now and 18,000, we do have another area on the chart which should be acting as support based on previous support levels, and that is coming into play closer towards 19,000. So once again, I'm expecting some support at around 19,000. But if we see the price of Bitcoin drop below 19,000, then the full technical price target for the bear flag is once again at around 18,000. And just before I get into the Ethereum part of this video, I'll quickly let you know that right now there's actually a $1,000 airdrop happening for Ethereum to USDT contracts, which means you can choose to receive that $1,000 airdrop in the form of an Ethereum long position or an Ethereum short position, and you can keep 100% of the profits, obviously. And so if you're interested, I'll leave a link to this page in the description down below and in the pinned comments. And by the way, the only requirements to receive this free $1,000 airdrop is to simply open a Bybit account under my specific link and have $1,000 deposited in there within 7 days of opening that account. And just making this clear, you don't actually have to use any of the funds that you deposit. You simply just have to make a $1,000 deposit within 7 days of opening an account under my specific link if you want to claim this 1,000 USDT airdrop. And once again, I'll leave a link to this page in the description down below and in the pinned comment. But anyway, getting into the Ethereum part of this video, this right here is the 12-hour Ethereum chart. And obviously what we've seen over the past day for Ethereum is the same story as Bitcoin and the stock markets. And so considering the fact that the price of Ethereum broke this previous level of support, which was sitting at around 1550 approximately, I will now be targeting towards around 1400, which is the full technical price target for this rising wedge pattern, which I've been talking about for weeks. But like I said on the 12-hour Bitcoin chart, if we're looking at the RSI for the 12-hour Ethereum charts, we could possibly form a bullish divergence right here because obviously we have lower lows in the Ethereum price action, but higher lows as of right now in the RSI on the 12-hour time frame. But once again, as of right now, we simply do not have the confirmation needed to confirm this bullish divergence, because for that, we would need to see at least 1 to 2 12-hour candle closes in the green, which would confirm a low in the RSI. But anyway, taking a look at the 6-hour Ethereum chart, and right now we can see a confirmed break to the downside from this bearish head and shoulders pattern. And obviously, for those of you who have been watching my videos for the past week, this is nothing new, because ever since around 6 days ago, right back here, I've been talking about the possibility of this head and shoulders pattern potentially playing out. We needed to see some short-term bullish price action over the past few days, which we did end up playing out. But now that the price of Ethereum turned around, came back down towards the neckline, and more importantly, broke below the neckline, this has now confirmed the head and shoulders pattern. So this is an active pattern in play right now. And in order to invalidate this break to the downside, we'll need to see a quick break back above the neckline, which is sitting at around 1560 approximately. And to further confirm the break to the downside, if we see a retest up towards that neckline and fail the break above and instead see a rejection from that level, then something like that would further confirm the break to the downside. But it's important to mention that that isn't actually needed to actually confirm the break to the downside. That will just add extra confirmation, which can make us more confident in the move to the downside. But for now, we do have one 6-hour candle close, which is technically one confirmation for the break to the downside for this head and shoulders pattern, which does validate this pattern. And despite the potential setup for a bullish divergence in the RSI on this 6-hour time frame, we do see the momentum in the MACD flipping more bearish bearish as of right now in the short term. And so when it comes to the price target for this bearish head and shoulders pattern, if we zoom out a little bit, staying on the 6-hour time frame, just measuring out the price target for the head and shoulders pattern, bringing it over to the break to the downside, and that gives us a price target at around 1,200 per Ethereum. And so if that technical price target for the head and shoulders pattern is hit, then that would be a drop from where we are right now down to the price target of nearly 20%. And so now bringing out our Fibonacci retracement tool from the June low up to the swing high, and what we can see is the golden pocket coming into play at around 1,200, which is the most important Fibonacci level. So that gives us confluence at around 1,200, which should be acting as a lot of support around that price. But as always, it is important to understand that between now and that price target, there are some other levels of support to keep in mind where we could see a bounce at. And to start off, we have this 38.2% Fibonacci level when drawn from the June low up to this high. And that level is coming into play at around 1480. So that could act as some shorter term support. And anything below that, we do have the 50% retracement level, which is sitting at around 1340, which is pretty close to this previous low, which has previously acted as support. But if we see the price of Ethereum start breaking below that previous low at around 1350, 1340, then in that scenario, it would be very likely for Ethereum to continue down towards this golden pocket at around 1200. And if you want to know how to profit from all of these moves in the market, whether or not the price is pumping, dumping, or chopping around sideways, check out these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.